You think pre-market trading is your secret beginner edge? That quiet hour before the bell rings, where you snag massive moves on low volume? Total myth. It's a FOMO-fueled slaughterhouse. A recent analysis of 10,000 retail accounts showed 92% of newbies who dive into pre-market blow up their accounts in under 60 days, faster than regular hours volatility ever could. Why? Your brain's wired for urgency. That illusion of easy picks hijacks your discipline, turning tiny scouts into account killers. I've coached hundreds of beginners through prop firm challenges, watched pre-market wipe them out one revenge trade at a time. Even pros like Ross Cameron admitted his early days chasing pre-market ghosts cost him six figures before he learned the hard way. Here's the real pre-market strategy for beginners. Ruthless discipline. Either skip it entirely to build unbreakable patience or treat it like zero expectancy scouting with microscopic 0.1% risk per trade. By the end of this video, you'll master that shift, turning a psychological minefield into your edge for survival and quiet profits. But before I show you the data that proves it, let's unpack why every beginner falls for this trap and how it hijacks your brain like a predator in the shadows. Picture this. It's 6 a.m. ET, your alarm blares, and you're staring at your screen in the pre-market darkness. 4 to 9:30 a.m., that shadowy window before the bell. An earnings gap pops on your watch list stock, maybe Tesla or Nvidia, screaming easy edge. Your heart races. You click buy on a breakout, convinced low volume means massive moves just for you. Sound familiar? You've been there, haven't you? That rush feels like insider info, but it's a trap. Here's why it matters for beginners like you. Your survival hangs in the balance. Pre-market is an opportunity. It's a psychological slaughterhouse with just 5–10% of regular volume. Those big moves on gaps or news, they're illusions fueled by FOMO, fear of missing out. You chase urgency, thinking if I don't act now, it'll be gone. Then comes the illusion of control. Dopamine hits from every click, even losers. Your three worst enemies: FOMO, fake urgency, action, addiction. They turn scouts into gambles. Think about it. Common myths sell you lies. Low volume equals explosive edges to exploit. Reality? Spreads balloon 10 times wider. Slippage eats 2 to 5% per trade before you blink. News chases win big on reversals. Nope. 92% of newbies in a recent 10,000 account study blew up in under 60 days chasing this chaos. Prop firm challenges. Forget it. Pre-market tilt after one gap reversal ends your funded account dreams. Burnout follows. Sleepless nights, family fights, that gnawing self-doubt. Am I just not cut out for this? You're not alone. Traders on Reddit and X rant daily. Pre-market was my edge. Until it wiped me. Stakes are brutal. Your capital, confidence, and shot at real trading. But here's the thing. Even pros like Paul Tudor Jones skip this chaos for a reason we'll uncover. Conventional wisdom peddles strategies that fail 72% of the time in this fog. Let me break down the first brutal truth with hard data. The volume trap that turns every pre-market plan into pure gambling. Picture this. You're staring at your screen at 6 a.m., heart racing as some penny stock gaps up 20% on whisper-thin volume. Just 5 to 10% of what it'll see during regular hours. Looks like a dream setup, right? You jump in, convinced you've spotted the edge everyone else misses. But here's the brutal reality of the volume trap. That low liquidity isn't your friend, it's a silent assassin. Spreads balloon to 10 times wider than normal. What was a 10-cent bid ask during the day? Now it's $1. Slippage? You're getting filled 2 to 5% worse than your order every single time. A 2023 Warrior Trading analysis of thousands of pre-market trades showed 72% had negative expectancy purely from these execution costs. Your winning strategy, it's bleeding out before the open even rings the bell. Think about it like trying to swim in a kiddie pool versus an ocean. In the pool, waves look massive. A splash feels like a tsunami. But one wrong stroke, and you're slamming into the sides, bruised and sinking. Pre-market's the same. Moves appear explosive because there's no real volume to sustain them. You chase ghosts and your account pays the price. You felt this, haven't you? That illusion of opportunity hijacks your logic. Your brain screams, act now or miss out forever. FOMO floods your system, prefrontal cortex shuts down, and suddenly you're sizing up like it's the last trade of your life. It's not strategy, it's gambling disguised as edge hunting. Let me prove it with a real story. Ross Cameron, founder of Warrior Trading, was you not long ago. Back in 2017, he blew multiple accounts chasing pre-market penny stock apps. One day, a hyped biotech gapped 50% pre-open on zero volume. He loaded up. Stock reversed hard on the open. Slippage turned a 10% winner into a 15% loser. He journaled it. 80% of his pre-market trades were duds from costs alone. Brutal self-audit. He pivoted hard. No more pre-market gambles. Focused on high-volume regular hours result, over 500 Kela in profits last year. Quietly compounding. Ross didn't find a magic indicator. He beat the volume trap by choosing patience over chaos. You can too. Skip the thin air. Wait for the pool to fill with real swimmers. Regular hours volume where your strategy actually executes. Patience isn't passive. Patience protects your capital. Patience turns survival into profits. But think that's just bad luck with volume? Wait till you see how news gaps make it 10 times worse. Your amygdala's worst nightmare is coming up next. You've chased those news gaps, haven't you? That earnings beat or FDA approval lights up your screen at 7 a.m. Stocks gapping 20%, 50%. Even 400%. Like GME on January 28th, 2021. Your heart races. This is it. The big one. Fingers hover over buy. Yeah, you've been there. Staring at the pre-market chart, convincing yourself the momentum will carry through open. But here's the brutal truth. Gaps create false urgency, and your amygdala hijacks the wheel every single time. Think about it. Your brain's ancient wiring sees that gap as a predator lunging survival mode kicks in. Amygdala fires, flooding you with adrenaline. Logic gone. Prefrontal cortex offline. You're not analyzing, you're reacting. A TradeStation study from 2022 nailed it. 68% of pre-market breakouts reversed within 30 minutes post-open. 68%. Yet retail traders pile in pre-bell, FOMO blinding them to the fade. Remember GME that day. Meme frenzy gaps at 400% pre-market on Reddit hype. You and thousands bought the spike, dreaming of moonshots. Open hits, 40% reversal in hours. Billions vaporized. Meanwhile, pros like Tim Sykes waited. He shorted the post-open dump, banking over $1 million. Not by predicting the gap, by ignoring the pre-market circus and confirming with volume. Sykes didn't chase the news dragon. He let it breathe fire on the amateurs. You felt that reversal pain, right? Position turns red, stomach drops. Just hold. It's different this time. Nope. Chase news, lose money every time. Chase news, bleed capital every time. Here's what nobody tells you. Waiting for confirmation crushes those impulses. Skip the gap trade. Watch the first 30 minutes post-open like a sniper. Does volume confirm? Is it holding key levels? No? Walk away. That pause rewires your brain, turns predator panic into predator patience. But it's not just losses. One sneaky win wires you worse. You catch a rare runner, dopamine surges, pre-market mastery, and now you're hooked. Scaling up next time. Bigger gaps, riskier bets. Your account's doomed. One win here doesn't save you. It sets up the dopamine doom loop. Let's talk overtrading next, where pros avoid the trap that's killing your edge. That one sneaky pre-market win, it's pure poison. You nail a quick 2-hour scalp, maybe $500 on a 50-kilo account, and bam, dopamine explodes like fireworks in your brain, feels like victory. But here's the trap. It triggers tilt faster than a lost streak. Suddenly, you're hunting the next rush, sizing up, chasing shadows. Your heart races, prefrontal cortex checks out, and logic? Gone. Think about it. A 2024 poll on R-Position $3 their 8 tried. 81% of pre-market traders admitted to revenge cycles, doubling down after losses, over trading to recover. Compare that to regular hours, folks. Jonstein, Jux, Sturvdiscipline. Just 45-20 for wide. Pre-market's thin liquidity amps every spike into a false promise. You feel the edge, but it's smoke. One study of your trades, you'd see win rates tank 20 to 30% on those easy scalps because emotions hijack the exit. You've been there, right? Screen glowing green for 10 minutes, then reversal. You hold, it's different, and it wipes the win plus more. That's not bad luck. That's your amygdala screaming action now, like it's a survival threat. Retail traders pile in, averaging 15 trades a pre-market session per Strateg data. Pros? They laugh. Paul Tudor Jones calls it straight. I wait for cleaner data. No rumors, no gaps. Boring? Yes. Profitable? Absolutely. Pros skip pre-market like Warren Buffett dodges stock tips. Remember his rule? I don't listen to rumors. I wait for the dust to settle. In 2008, while panic gaps shredded short sellers pre-bell, Buffett bought quality post-open when volume confirmed value. He didn't scalp volatility. He preserved capital. Cleaner edges, fewer blowups. Trading view backtest on SPY confirm it. Regular hour setups show 15 to 20% higher win rates. Liquidity crushes thin air every time. You're nodding because you felt the heroic pull. That machine gun spray of trades feels productive. Exhausting. Deadly. Counterintuitive truth. Boring beats heroic. Skip the dopamine spikes. Trade like a sniper, one clean shot post-open. Your brain fights it at first. Evolution wired you for the hunt, not the wait, but force the discipline and tilt vanishes. Edge emerges. Tension building. Good. You've got the potential to tilt your account to zero chasing those spikes. But the pro path? It's available right now. Patience over panic. Consistency over chaos. So how do you dip into pre-market without dying? The scout mode hack changes everything, but first, those prop firm disasters that expose why most beginners blow the challenge. Here's the thing, you're itching to play pre-market without blowing up. That sniper patience we talked about, it doesn't mean total avoidance. It means scout mode, micro risk scouting. Insight number 5, and it's a game changer for beginners. Risk just 0.1% of your account per trade. Yeah, you heard that right. 0.1%, not for hero profits, for pattern hunting. Like a lioness circling the herd, testing shadows, never lunging blind. Think about it. Conventional wisdom screams, right, pre-market volatility, size up big for those gaps, wrong, deadly wrong. Your brain sees thin volume as opportunity. It's a trap. FOMO floods dopamine, amygdala hijacks the wheel, and suddenly you're revenge scalping NVDA on a rumor. Account? Shredded. But scout mode flips it. Tiny risk builds unbreakable habits. No ruin. Just reps. Pure psychology warfare. You versus your urge to overtrade. Let's math it out simple. Assume 50% win rate. 1-to-1 risk reward. Boring? Sure. But a 20 loss streak, odds are 0.0095%. 1 in 100,000. Survivable. Laughable even. Compare that to your typical 1-to-2% risk sprayer. 5 losses in a row hits 3% chance. 10, 0.1%. Your equity halved. Scout mode, you'd lose 2% over 20 bombs. Capital intact. Trust rebuilds. Process sharpens. That's the edge. Not indicators. Discipline. You're feeling it now, that hope flickering. Tiny bets empower massive growth. No tilt. No one more to recover. Just data. Patterns emerge. Pre-market quirks you ignore in chaos. They whisper truths, but only if you're alive to hear them. Take you, throwaway prop fail on Reddit. Guy failed 3 FTMO challenges. Blasted NVDA scalps pre-bell. 2% risk pops. Gaps nuked him. Felt like a machine gunner in fog, he posted. 4th try, scout mode. Skipped pre-market entries entirely after week 1. Dropped to 0.05% risk on live sim. Journaled every itch to trade. Passed with 65% win rate. Regular hours only. Boring saved my ass, he said. Habits stuck. Prop firm funded. You could be him. One rule change. This scout mode, it's your pre-market lifeline. Builds the patience muscle pros like Paul Tudor Jones, forged over decades. No excitement. Just survival turning to quiet wins. You've got this. Start tomorrow. 0.1% max, 50 reps minimum. Watch your brain rewire. But here's the brutal part. This saved him. Yet 92% of prop challengers still fail. Why? Those firm rules expose your deepest addiction next. Stay with me. But here's the brutal part. This saved him. Yet 92% of prop challengers still fail. Why? Those firm rules expose your deepest addiction next. Stay with me. Think about FTMO and Top Step data from 2023. Over 92% failure rate across 100,000 plus accounts. Here's the kicker. Pre-market trades flagged in 65% of disqualifications. Not because the setup sucked, because you couldn't stop. That 4 a.m. glow from your screen? It's not edge. It's a siren call straight to account oblivion. Traders on X in 2024? Threads exploding with confessions up at 3:30 a.m. for pre-market NVDA pops. Now divorced and burned out. One poll hit 70% admitting insomnia or full meltdown from the grind. You're nodding, aren't you? That just one more session lie you tell yourself. It hits in threes. First, over leverage. You risk 2% on a foggy pre-market